We've all seen gold skyrocket in the recent months to new heights, and now you're thinking it's time to get in on the action. Well, let's find out why and how you should start investing in gold today. Welcome back to the Art of Finance. In today's video, I'm going to discuss why you should start investing in gold. Gold is a part of the precious metal group alongside silver, platinum and palladium. There is a limited availability of how much of these precious metals can be mined. Approximately 65% of the world's gold has been mined since the 1950s, and the finite supply of gold adds to its rarity and attraction. This drives the price of precious metals upwards, as there's always a demand for it, as it's highly valued in jewelry, art and currency. Gold is also considered as a value of someone's wealth, symbolic power and strength. In the 1970s, the US currency system was changed as there wasn't enough gold to cover all the paper money in circulation. The US dollar became a fiat currency backed by nothing more than the health of the US economy and the promise of the US government. Recently, we have seen gold prices surging on an all-time high. For investors, we are seeking a safe haven, and we are using gold to hedge against inflation and protect against losses in other assets like stocks and bonds and other commodities. This is also a safeguard to the global pandemic as we are currently in. Your fiat cash can become zero in the worst case scenario, whereas gold is recognized worldwide and it can be traded anywhere you go. Hence, many people today try and own physical gold. For investors, gold is a non-volatile stock and it's always trended upward, and the price has always increased. Hence why investors like to own 10 to 15% in their portfolio. This always helps to keep the portfolio diverse and hedge against inflation. Times are quite uncertain at the moment due to the global pandemic. People all around the globe are trying to get a hold of some gold. As the economy is quite uncertain, the dollar, pound and euro prices can drop dramatically. This can allow investors to hold gold while waiting for the current prices to recover or cash in when needed. So one of the main reasons to invest in gold is to counter inflation. Now, for those of you that don't know what inflation is a general increase in prices and fall in the purchasing value of your money. So for example, the £100 in your bank today, next year will turn into £98. Now you might be thinking, how the hell does that work? Well, the rate of inflation in the UK is around about 2%. So an example is, if you was to do your groceries every week in 2020, comes to around about £100, next year those same groceries will come up to £102 due to the inflation rate of 2%. So that's why your purchasing power is being decreased. So you have to put in an extra £2 for you to have that same groceries that you usually buy. And now what gold does, if you're invested in gold usually holds its value and increases in price. It's a very stable thing to buy and it is non-volatile. So that's why a lot of people decide to invest in gold, as it hedges against inflation, so you're not really losing any money. And also the plus side of it is that your money could also go up as well, so you're also making profits on it. Now another good reason to invest in gold is the liquidity. Now with liquidity, you could buy a small ounce of gold which costs £1,500 at the current price. So a small ounce of gold, literally you could put in your pocket and take it anywhere in the world and cash it out. Now there's nothing more liquid than gold. You have silver and other precious metals as well, but I'll do a separate video on silver as there are a few differences on how to invest in it. Another great reason is due to diversification, as I touched upon earlier, that it widens up your portfolio so it covers you in different sectors. Precious metals are also increasing in demand. The more that people buy it, there's more rarity. How to invest in gold? The main way to invest in gold is to purchase physical gold bars or coins. Gold bars or coins are always in its purest form, being 99.9% gold, which is also referred to 24 karat. Gold bar or coins come in different weight and sizes for you to purchase, which gives you the flexibility to acquire small and large amounts of gold. Typically, there are two main ways that the golds will come in, either bars or coins. Both bars and coins will have a small premium when purchasing them. Usually gold bars are cheaper than gold coins. This means you are always paying above the spot price of gold. When purchasing gold, don't get held up in the branding, as gold is gold. Brands like Pamp Sweeze will have an extra premium due to the lovely engraved designs on their bars. There are also premiums to pay depending on the size of the bar or coin. There are more premiums when purchasing smaller gold bars compared to larger gold bars. When it comes to liquidating your gold, you usually tend to get back the premiums you paid for if you take it back to a gold dealer. Anywhere else in the world will consider it at the gold scrap price at that moment and do not care what bar or coin you have, so be careful which brands you go for. One advantage to be paying an extra premium if you are into collecting gold coins, as particular pieces can go up in price, known as collector pieces. This is the only situation where you can sell your gold in the short term, as it can be sold well above the current spot price. If you are just starting off, I wouldn't recommend getting into gold coin collecting, as it's very expensive to get into and you'll need to be up to date with the current hot coins people are collecting. On the other hand, silver coin collecting is much easier to get into, as the prices are significantly lower for you to attain many different collector coins. I will do a separate video on how to purchase silver coins. The best way to buy gold and get the best bang for your buck is to buy a large gold bar and a brand that doesn't have any engraved design on the bar, as these are more expensive. Then hold for a long time for it to increase in price. When purchasing gold bars and coins, you must have a very secure location to store your gold, as you are not going to be touching your gold for a very long time. Typically, a bank or a safety deposit box is used to store such assets. If you want to leave them at home, make sure they are in an extremely safe location and out of sight. Physical gold bars also don't take up a lot of storage space compared to silver, and 1 ounce is currently worth around £1,500. This makes it very flexible and portable when travelling with gold. This can then be easily taken anywhere worldwide without anyone knowing you are carrying large amounts of gold, where it could be sold for cash. Gold jewellery works in the same way, but I'll touch on that later. There is also an incognito benefit of purchasing gold bars or coins. When it comes to liquidating your gold, initially, you do not pay any tax on 24 karat gold, as it is exempt. But any capital gains when selling gold is subjected to capital gains tax. When it comes to selling your gold, you may forget to include it on your tax assessment form at the end of the year, as no one knows you had any gold in the first place. Always pay your taxes. Gold jewelry is an excellent way to purchase gold as an investment also, as you could get the most out of your investment, such as wearing gold rings, chains and much more. When purchasing gold jewellery, a lot of high street jewellers will rip you off. This is because the gold you are purchasing are low in gold content, such as 9 carat and 14 carat gold, as they charge an extra high amount of labour costs, increasing their margins. For those of you that don't know the gold carat system, I will explain it now. 24 karat gold is the ultimate gold carat. It doesn't go any higher than this. It's the purest form and consists of 99.9% gold. It is naturally yellow and highly valuable, but very soft and malleable, so it is not usually made to make fine jewellery or intricate objects. 22 karat gold consists of 91.6% gold, so it is highly priced. It is very soft, so it's not ideal for stone set jewellery, but being more suitable for plain gold jewellery such as wedding bands. 18 karat gold contains 75% gold, with the rest made up of other durable metal alloys used to add colour and strength. White metals will be added to create white gold, with copper added to create rose gold. 18 karat gold is appreciated for its radiance and is much warmer and brighter in tone than 14 karat gold and 9 karat gold. 14 karat gold has around about 58.5% pure gold and has a warm yellow hue. It is more affordable than 18 karat gold. 9 karat gold has 37.5% pure gold. It is the most affordable form of gold jewellery and portrays a light yellow hue. For more complicated designs are more expensive than simpler designs, so keep that in mind. When purchasing gold, try to go to an Asian jeweler, as all of their pieces are 22 karat gold standard. This contains a solid amount of gold. The colour is very warm and attractive, unlike 14 karat gold and 9 karat gold. So when it comes to selling your gold jewellery, you'll be getting a larger return as there is a lot of gold within your jewellery. Gold jewellery will also have a hallmark. A hallmark is a UK government seal that is stamped onto the precious metal object, such as jewellery or silverware. The purpose of the hallmark is to certify the metal purity of the item. In other words, if an object has a stamp with a gold hallmark, then you, the consumer, knows that it is indeed real gold. But to always be sure, you could take your gold into any jewelers and they could test the gold. The purpose of a hallmark is to certify the metal purity of the item. In other words, if an object is stamped with a gold hallmark, then you, the consumer, knowing that it is indeed real gold. So that is my in-depth gold guide investment video. I hope you like it. Please feel free to drop a comment. If you have any questions, please like, comment and subscribe for more videos. Peace.